parameters, since there are only a few people on today, I'll try to tailor it to the time period that you have and make sure I'm as responsive as I can be. So if you have the ability to text me what your time period is, then I will be able to start very quickly. If you put it in the questions pane, that's the easiest way. Then it shows up on my screen and I know whether we're ready to go. Okay. And if everybody is not on a computer and they're on a mobile device, then I'll just start going through this. Okay. Today we're going to talk about FIRPTA, it says Florida Investment in Real Property Tax Act. Of course, it's not. It's Foreign Investment in Real Property Tax Act, but we're doing this for the Florida agents. So it's a Foreign Investment in Real Property Tax Act. It was created in 1980, and if you think about what it is and why it is, it's had an odd history. The history was that Congress was very nervous in the 1980s about Japan and Germany buying up the United States. You'll remember that they were buying the big office buildings in San Francisco, in New York, in Los Angeles, and people were worried that we wouldn't own America anymore. So they created an act to try to register all foreign ownership in the U.S. Well, that quickly became a complete disaster, unmanageable, and too expensive to create such a database. What did happen, though, is the IRS realized that they're never going to get paid on the profit that these foreigners make when they invest in the United States because it's too expensive to go back to their countries and sue them for the profit. So the FIRPTA Act turned into a withholding obligation for when foreign sellers sell the real property. What it does is it requires that a seller withhold 10% of the gross sales price so that when they do their final tax submittal, there'll be money in the till with the IRS to be able to pay those taxable gains. Now, there's a bunch of limitations, a bunch of exclusions, and in general on this call, what I'm really trying to do is I'm really trying to educate you on the general aspects, to encourage you to get advice as quickly as you can. And by that I mean as soon as you know you're dealing with a foreign seller, call me, call their tax professional to get professional advice. There are things that can happen as soon as you start that listing appointment that need to happen so that you can be most effective in proceeding forward with this. Okay, so if the foreign seller owns the property in an LLC, I get a question all the time, do you still need to withhold the 10%? It's a Florida LLC, so technically it's a Florida company or a Florida entity selling it. No, the IRS rules and the FIRPTA Act say that you look through the shield of the company to see who the beneficial owner is, and if the beneficial owner is a foreign individual, then you still have to withhold the 10%. One of the most interesting parts of the Act is this next point, which is you have to refer, where is it? Here it is. You have to know that even if you're representing a buyer, you need to pay close attention to this, because the law holds the buyer liable for any improper non-withholding. So if a foreign seller doesn't say anything, collects their full money at closing, goes back to France, never says another word, and you, as the buyer's agent, allow that to happen, know that the IRS can come back to that buyer and say, look, you were supposed to be one of the withholding parties. We're going to hold you liable for whatever the profit was on the sale of that property, and that buyer can get hit for the full expense and full liability. Now, they also hold closing agents liable, which is why Trident Title is very conservative in their analysis and demands that we get proper information from sellers, or else we will withhold the 10%. But we do that as a protection to ourselves and to the buyers. So again, it's the buyers and the closing agents technically who are liable under the Act and can get a lien filed against the property by the IRS for the withholding. So what is it that you need to do on this? Well, as soon as you're approaching your listing, you want to know if they're U.S. citizens or if they're a resident alien, which means they have the right to live here and they have been given a Social Security number, and you want to obtain that Social Security number. If they're not a U.S. citizen and not a resident alien, then you want to encourage them to go to an acceptance agent. There are a bunch of them in Florida. We have a relationship with one in Boca Raton that we're happy to hand out to people if they want to call us on it. And they need to fill out a form called a W-7, which gives them the equivalent of a Social Security number for foreigners. It gives them a foreign taxpayer identification number so that they can do a proper withholding on or before closing. So the first thing you want to do at the listing stage is have them go to an acceptance agent with all their information so that they can get a W-7 filed and they can get a tax ID number. Once they have that, then at the time of contract, you can either file for a withholding certificate or do an actual FIRPTA submittal. But you have to have a tax ID number to be able to move in that direction. Okay. The next item on this list is FIRPTA, adding a FIRPTA addendum to the standard contract. Know that if you're using the 2013 forms, then the 2013 forms incorporate the FIRPTA addendum into the actual contract now. So there's no longer need, if you're using the FAR forms, to incorporate a separate FIRPTA addendum. But if you are using another form of contract, whether it's the FAR or whether it's an older form of the FAR, you do have to include the FIRPTA addendum as part of your contract if you have a seller who's a foreigner. So that is the end of the first page. I was going to go back and give you some general definitions now. The amount realized under the FIRPTA statute means the sales price. It doesn't mean the net amount. So if somebody's making $600,000 on the sale price and they've got a mortgage of $400,000, it does not mean the $200,000 net proceeds. It means the $600,000 sale price. Non-resident alien, that's somebody who needs to do a FIRPTA withholding. That is somebody who's a foreign person who does not have a resident alien card, also called a green card. The transferee is the buyer in the transaction. The transferor is the seller in the transaction. And the closing agent, hopefully, is always me, but is whoever the title company is or law firm that's handling the sale. Okay, now and I'll put those up on the slideshow to give you all of those up on the screen. The next slide that we're going to talk about is the exemptions. Everybody always talks about $300,000 is the magic number. That's the magic number for the exemptions. So you do not have to withhold 10% of the proceeds if two things occur. First is that the purchase price is $300,000 or less, and the second thing is that the property needs to be the buyer's personal residence. Now, what does personal residence mean? Personal residence means that the buyer or the buyer's family member can occupy the property at 50% of the number of days of the property is going to be in use during the first two 12-month periods. So you need to use it for 50% of the time for the first 2 years. Now, here's my tip for you. My tip for you is you want to get in the contract when you have a buyer. You want to get them to sign the contract, and in the contract you want them to state in the additional clauses section that the buyer intends to use this property as a personal residence for the first 2 years after the closing. Why do you want them to do that in the contract? Because if you don't get them to do that in the contract, then they have to sign an affidavit at closing for you to benefit from the exemption. Now, here's my story about why you can get in trouble if you don't get this in the contract. I've had a number of circumstances where the real estate agents ask the buyer, are you going to use this as a personal residence? Yes. Great, then we'll sign a contract with you over somebody else because we don't want to have to withhold 10% and we want to benefit from this exemption. Then all of a sudden the buyer does their inspections and the buyer says, I want a $5,000 credit because I'm going to have to replace the roof and I don't like the way the appliances look and I want to put in a new floor and this is chipped and that paint has too many holes in the wall, blah, blah, blah. And the bottom line is the buyer turns back to everybody and says, if you don't give me the $5,000 credit, I'm not signing your FIRPTA affidavit. And then you're stuck. Now you have to do a 10% withholding because you can't prove that this buyer is going to use it for their personal residence, whereas you would have been fine just relying on the affidavit or the signed contract in lieu of an affidavit. So again, the exemption for not having to file for FIRPTA is if the purchase price is $300,000 or less and the buyer is going to use the property as a personal residence for 50% of the time of the next 2 years. Okay, let's turn the page to the next issue. Let's talk about when you have to withhold, what needs to be done. In general, if the seller is making a profit and you're going to have to do the 10% withholding, it must be collected at closing and sent to the IRS within 20 days of the closing date. And the closing agent should be able to do the paperwork for you. You have to file an IRS form 8288 and an 8288A. If you're not making a profit, then you can file for something called a withholding certificate, which is filing the form 8288 and then an 8288B. The form 8288B says, I'm not making any profit, so I shouldn't have to withhold 10%, and here's my proof that I'm not making any profit. You show the original deed with the doc stamps so you know what the original purchase price is. You also show them the original closing statement. Then you show them any improvements that were made that increased the basis of the home. And then you show them the proposed closing statement and the existing contract for the sale to show that they bought it for $1 million, they're selling it for $800,000, or they bought it for $1 million, they put $200,000 in and they're selling it for $1.1 million. So there's no profit, therefore there should be no withholding to the IRS. If you're doing a withholding certificate, it must be submitted before the closing. It can be submitted the night before the closing, but it must be submitted before the closing takes place, period. If there's no submittal, then you have to send the 10% to the IRS within 20 days of the closing date. Now, one other point about that is what if you're looking for a withholding certificate because you're only making a small profit? Can you still request a withholding certificate? Absolutely, yes, you can. So in my example before, you bought the property for $1 million and you put in $200,000 of improvements and you're selling it for $1.25 million, so you're making a $50,000 profit. Well, you shouldn't have to withhold $125,000 with the IRS until you file a tax return for the next year. You should be able to send whatever it is, 40% of $50,000 to the IRS. So you can file a withholding certificate before closing to say, look, I'm only making $50,000. I want my withholding to be reduced from a full 10% to $40,000. And as long as you file that withholding certificate before closing, here's what happens. If you file the withholding certificate before closing, the title company will withhold the full 10%, but they're allowed to hold it in their own escrow account and not submit it to the IRS. And they're able to wait for a response from the IRS. The IRS is supposed to get back to you within 90 days, but today it's taking close to 200 days. And you're allowed to wait and keep the money in my escrow account or whatever other title company is handling the closing until they hear from the IRS. And so the money doesn't go into the IRS abyss. It doesn't get held there until the final tax return is reviewed, and then you get the money refunded. It comes back much quicker when it's coming from a withholding certificate that's in my escrow account or the title company's escrow account. Okay, so we've covered that the 10% needs to be collected, sent to the IRS within 20 days. If you have to do a withholding, you can file for a withholding certificate before closing, and you can hold that 10% in the closing agent's trust account still until they hear from somebody. Now let's talk about one of the unique exemptions within the rule. And nobody knows about this, and I see a lot of other title companies and even law firms making mistakes on this. But what they don't know is that if it's a husband and wife, and the husband is a U.S. citizen or a resident alien, but the wife is not, then you have a 50% withholding obligation. So here, as you can see, the sale price is $500,000. That means that you only have to withhold basically 10% of half or 5% of the whole amount. So we see a lot of people sending way too much money to the IRS in that circumstance. You only have to withhold 10% of the foreigner's interest in the property. And if their interest is only half, then you only have to send 5%. Okay? One other small point, if there are multiple foreign sellers, you must agree in writing on the allocation for each, or the sale price will be equally split between the parties. So if you have 4 people, they're all foreigners, and they send you a listing agreement, unless there's evidence to the contrary, you have to do 4 withholdings, and you have to attribute 25% to each of them. And this is important because you get in big fights and you even get lawsuits thrown around when somebody says, hey, wait a second, I was only a 10% owner of that company, and you withheld 25% of my proceeds, and I'm in a fight with the other guys now, and they're not giving me my, whatever it is, in this case, a 15% back, and the IRS returned the money to them. Very important to know who you're dealing with, what percentage interests. Obviously, if you're dealing with my title company, that won't be an issue because we know to ask. But if you're doing deals and you're on the buyer's side and you are obligated to make sure the withholding is done right, then you need to make sure that whoever that withholding closing agent is knows these rules and does it the right way. All right, let's move on. I'll give you a little bit more details about the application for withholding certificates. Number one, I always encourage people, realtors, to encourage them to either have their accountants or their real estate attorney prepare the 8288B as soon as possible, as soon as you've got a contract signed. So when you get the listing agreement signed, you want to encourage them to go to an authorized agent to get a W-7 filled out and get themselves a taxpayer ID number. You want to get to an acceptance agent as quickly as you can. When you get a contract signed, you want to prepare the 8288B as quickly as you can if you're doing a withholding certificate. It's a very simple form, but I know to ask for the old closing statement, the old contract, any improvements, the new proposed closing statement, the new contract, to get everything prepared and submitted to the IRS. Again, you still have to withhold the entire 10%, but it stays in the title company escrow account until you hear from the IRS about a determination. And again, the IRS is usually responding in 90 days with the staff that was cut down and relocated. The good news and the bad news is they used to have FIRPTA agents in each of the field offices throughout the country. They've now consolidated them in the Ogden, Utah office. So everybody's there. They all understand FIRPTA really well, and they're trying to work through the workflow. The problem that you have today is a bunch of different things. They cut the staff down tremendously, so they just don't have enough people to handle all the volume, and that it's all going to Ogden, so it's getting more and more backed up. I would say the last 3 withholding certificates that I sent were responded to in 120, 180, and even 200 days out. So you need to prepare people for a long wait, but I promise you it's better to keep it in my escrow account than it is with the IRS. Okay, let's talk about FIRPTA and short sales. Again, all the more reason to apply for a withholding certificate. If you know you're losing money on the deal, the banks do not allow the 10% withholding. If they do, they insist that the 10% withholding comes back to them once the withholding certificate is authorized. But most of the banks will not allow the withholding. So they turn back to you and say, that's too bad, you should have applied for a withholding certificate as soon as you had the contract, as soon as you submitted the short sale, so that you would have gotten the withholding certificate approved roughly in the same time period that the short sale was approved. Again, if it's $300,000 and under, there's an exemption. You don't have to worry about it. But if it's over $300,000, put it on the preliminary HUD that you send to the short sale lender so that they know it's a foreigner. They know that there's an obligation to withhold. They don't get surprised at the end. Most of those short sale lenders are coming back to you and saying, take that off the HUD. I won't agree to allow it on there. Get a withholding certificate, or I'm not entertaining the short sale. The few that say, okay, we'll allow it, they also make it very clear that they want that 10% to come back to the bank once the withholding certificate is received by them. Okay, so I have a question from somebody, which is great. Let me read that. What happens if it's a 1031 exchange? If it's a 1031 exchange from a foreigner, I believe you still have to file for a withholding certificate, but I'm not 100% sure. So I will contact my 1031 company to make sure, and email you back. If you'll send me an email at pkrasker@kraskerlaw.com, and anybody else who wants the answer to that question, I will research it and email you back with a specific answer. I know I've done that in the past. I know I've had a deal where they were doing a 1031, and we either got, it was either exempt because it was under $300,000, or we had to file for a withholding certificate. I don't know if that's changed. It would make sense that it changes because that's a foreigner who's not leaving the country, so they don't have to worry about them getting the tax until they sell the replacement property, but I'm going to have to check on that. All right, getting back to the Form 8288 and the Form 8288A, again, it's the buyer's obligation. The buyer's the one who's staying in the U.S. The buyer's the one who the IRS is going to hammer if this isn't done right. So it's a form that's required to be filed by the buyer rather, and it outlines all the specifics of the transaction. The buyer, the title agent is the one who's filling out these forms, or the attorney, or the accountant. The buyer is going to be required to sign the form, though, and the buyer gets a copy C. There's a 8288A, but they have Form A. They have a copy A, copy B, and copy C. Copy C goes to each of the foreign sellers. Copy B stays with the withholding agent, and copy A goes to the buyer. So the buyer is responsible to give each of the foreign sellers one of the copies. All right. I don't think I'm able to go to the next page. Here it is. But so the long and the short of it is, to just give you a summary, as soon as you get the listing, give us a call. We'll review all these things again to make sure you're on the right track. But if it's under $300,000 and you think you're going to get an exemption from it, great. You don't have to do the W-7. Just make sure when you're marketing it, you make sure you market it to somebody who's going to use it as a personal residence. If you're not sure that you're going to be able to do that, then you absolutely need to send them to an acceptance agent for the IRS. There are a whole bunch of accountants in Florida that are acceptance agents. You'll get them a W-7. You'll make that seller aware that they're going to have to withhold 10% of the proceeds if they don't find somebody to use it as a personal residence. If it's over $300,000, all the more important to get them to a W-7 acceptance agent, to get them a taxpayer ID number, and as soon as you get that, contract, if they have the ability to show that they're not making a sizable profit or not making any profit, you want to submit the withholding certificate as quickly as possible. Don't put yourself with a bullseye on your back. Don't be the one giving out legal advice on these matters. Know to just refer them to us. I'm sure you all know by now, and I hate to keep repeating it, we have an attorney hotline that you can call and get free legal advice on the telephone to advise them of these issues. And if they want us to start preparing documents, we charge a reasonable fee to prepare the documents, I think significantly less than some of the accountants charge, and we encourage you to pursue that. Let's see. I don't think I have any other statements to make. If you all have any questions, go ahead and type any questions that you have. I'll stay on the phone for an additional minute to make sure that I answer them. And in the meantime, I'm going to send off an email to my 1031 exchange company to make sure that there have been no changes since the last time I handled this. All right, I'll wait another 30 seconds. I don't know if I can tell if somebody's typing or not. Okay, I will sign off now, and we'll have this, we tape recorded this, so we'll put it up online so everybody can listen to it if they have questions. And again, Paul Krasker signing off. Thank you for your time.